Hi traders, in this video we're going to be taking a look at the three black crows candlestick pattern, otherwise known as falling three candlestick pattern. So this can help you catch very big moves such as this one we see here, which is over 200 pips. This is a 4-hour pound dollar chart. You can spot this particular candlestick pattern on any chart time frame if you want, anything from the 1 minute, the 5 minute, 1 hour, 4 hour, daily, weekly, monthly, just whichever you prefer. I personally prefer the 1 hour charts and above simply because I find signals, whether that's from technical indicators or price action, candlestick patterns, just to be more reliable when they contain more data. It also means less time spent chart watching. Okay, so how can you spot this candlestick pattern? Very, very easy. What you need to do is just to look for three bearish candles or three down candles. Okay, so straight away we can see here 1, 2, 3. So that's the three black crows as they're known, or the falling three. And that's it. Simple as that. You can trade it as is. So the signal, first, you need to just ensure we're in a downtrend, which we are here. Usually three big black crows like this would determine that we already are in the downtrend. So once you've identified that, the entry point is on the, you wait for the pullback, as we have here. And an entry is usually on a breakout below the support level following on from the candlestick formation. So here we have the three black crows, we have the pullback, and then we have the breakout. As you can see from this big breakout bar, that this is probably a pattern that was being watched by a lot of traders, big players, institutions. And it would have been a great trade just based on this simple candlestick pattern. So you can trade it as is, and that's without doing any further analysis. However, I would personally be looking to look at the price action around the pullback. For example, you can see here some spinning tops, pin bars, shooting star, inverted hammers, got an inside or outside bar there. This is quite bearish price action, which would have gave us confidence that the entry here would have been a good one. What we could have done is placed a pending sell order just on the other side of the support level here. So let's just say price was around here. You didn't know or plan to be at your charts when the breakout occurred. You could have just placed the pending order here and it would have triggered for you automatically. Okay, or you could have taken it with a market order. Just be careful for slippage. You don't want to try to enter here and price has already fallen down here. That being said, this is a 4-hour chart, so there's probably plenty of action within this bar, plenty of time for you to take the trade. So yeah, let's just say we entered here. We could have placed our stop loss the other side of the support level around 10-20 pips, which is a really tight stop loss for the 4-hour chart. We would have been very happy once we've seen price drop over 100 pips. In that case, I would have taken some profit off the table, banked some pips, and perhaps locked the trade in at break even plus, 50% of this bar. As you can see, that would have kept us in the trade when the pullback here did occur. And we would arguably still be in this trade as the price continued downwards. We could have moved our stop loss above these recent highs, starting there, then to there. I'll use this line to illustrate. So stop loss moved to here. As price fell to this area here, we'd move our stop loss above that high. See price drop further, we could move our stop loss above this high. Price came down here, trailing stop again above this high. And we still would be in this trade, arguably with our stop loss around here. Therefore, we've locked in over 150 pips profit, and we're going to see how this thing plays out. Currently is a strong level of support here, but there is the downtrend, though some may argue this might be exhausted. So we'll keep an eye on how this particular move plays out. But that's really how simple it is to identify the falling three or the three black crows candlestick pattern. I can see another one here. I just want to illustrate an example of why it's important to wait for a trend first. As you can see here, we have the 1 to the 3 pattern there. However, you wouldn't necessarily have just jumped in because we can see we're close to a level of resistance. So if we just mark that, you can see this level of resistance here. We're still within this this zone, so you'd want really for a breakout like this just to confirm the direction of the market before looking for the pattern. That being said, had we have taken this one, maybe we would have been triggered into a trade here, which wouldn't have been too bad considering the stop loss probably would have been the other side of resistance up here somewhere. And you can see the breakout here was a good one, and it would have got us in this trade over 100 pips earlier. That being said, there are occasions where you will see price range, and perhaps even continue up in this direction, which is why it's important to have our stop loss in place. I personally prefer to wait for the breakout to occur with this candlestick pattern. You can, of course, use other technical indicators and other candlestick patterns to confirm entry. Here we have a triple top, 1, 2, 3, triple top candlestick formation where the resistance has been tested 3 times. If we put price at the neckline, which is basically the support within the triple top, you can see that that was around this breakout here. So that may have been, if we use that with the 3 black crows and triple top candlestick pattern, this bullish, this bearish price action could have been another reason to take this particular trade. So we even have a wedge pattern here as well. So there's a breakout down there. I've done videos on wedge patterns that you can check, as well as triple tops. So yeah, it's just good to have an idea of as many candlestick patterns and price action formations, and of course always support and resistance. The more that you know and you're aware of, the more that you can filter your trades for valid entry signals. As you can see, there is potential with this free falling candlestick pattern to catch some big moves like this. And as I said, I find the higher chart time frames seem to give, or they don't seem to, they definitely give more reliable signals from my experience, simply because they contain more price action data within them. You can, of course, look for this particular formation on any chart time frame, as I said, and trading instrument that you want, whether that's Forex, stocks, cryptos, indices, etc. So yeah, it's a very basic pattern, but sometimes the basic ones are the ones that work best, and you'll find that on the higher time frames they almost have a self-fulfilling prophecy because they're watched by many traders. Okay, there is the opposite of this candlestick pattern, which we're going to look at, which is the 3 white soldiers. So we'll take a look at that in a video shortly. Hopefully you found something useful here and different ways you can implement it within your trading. Thank you for watching. Please like and subscribe for more. Catch you on the next one.